Look at the chart. Look at what's unfolding right now in Asia's electronic trading markets. The pattern we've tracked for 5 years has finally completed. On the monthly chart, the cup and handle formation, one of the most bullish signals in technical analysis, has broken decisively to the upside. The algorithms have flipped from sell to strong buy. We are not waiting for a rally. We are already in one. Futures data suggests that when full volume trading resumes next week, silver is programmed to gap violently higher. The mathematical probability points to $150 per ounce. This isn't hype, it's mechanics. Decades of pressure have built beneath the surface, and the lid has just blown off. To understand why $150 is inevitable, you have to understand short covering. Bullion banks like JP Morgan, Citi, and HSBC are short hundreds of millions of ounces. They bet on lower prices. Prices moved against them. They are now underwater by billions. Their options are simple: double down on a losing bet or buy back silver to close their positions. Our sources indicate they are preparing to buy. When the largest banks on earth rush to buy the same asset at the same time to avoid insolvency, that is the definition of a short squeeze, and it is scheduled to begin Monday morning. The trigger is a physical shortage. Refiners in Switzerland and recyclers in the United States report that scrap silver flows have stopped. People are not selling jewelry or silverware, they are hoarding. At the same time, industrial demand, especially from solar manufacturers, has surged. Tesla and Samsung are bidding directly at mine sites, bypassing COMEX entirely. The supply that once suppressed prices has vanished. Infinite industrial demand plus zero public supply leaves only one outcome. Prices rise until forced selling begins. That price is not $80. It is $150. Now add the currency factor. The dollar index has broken critical support. The world is dumping dollars for commodities. China is selling treasuries. Saudi Arabia is settling oil in gold. Dollars are flooding back home, igniting a superinflationary dynamic. In this environment, silver is not just an investment, it is survival. The rise in silver is the collapse of the dollar made visible. Hard assets are being repriced. Silver is simply the most undervalued, which means it has the most room to run. A move to $150 isn't speculation, it's silver catching up to reality. The paper market is breaking. For years, silver prices were dictated by paper contracts. Now we face a delivery month. Buyers are standing for delivery. They want metal. The exchange doesn't have it. Vaults are effectively empty. When delivery fails, the exchange will be forced to offer massive cash premiums to settle. That settlement price becomes the new floor. We expect premiums exceeding $100 just to avoid default. Once officially acknowledged, street prices will leap toward $150 instantly. Consider the gold-to-silver ratio. It sits near 75.1. Historically, it reverts toward 15.1. With gold at $3,000, that implies $200 silver. A $150 target is conservative. The imbalance has stretched too far. Markets always correct. Next week, the correction begins. Psychology matters. Once silver crosses $100, perception changes. It stops being a cheap industrial metal and becomes a monetary asset. Institutions that ignored silver will allocate. A mere 1% pension allocation would consume 10 times annual global supply. That money is waiting for confirmation. Once $100 breaks, the move to $150 will happen in days, not weeks. Supply is tightening further. Primary silver miners are withholding production, stockpiling their own output. This is a supply strike. When miners hoard, end users panic. We expect at least one major miner to announce withheld sales next week. That announcement will be the spark. Geopolitics adds fuel, war in the Middle East, tensions in Asia. Capital is fleeing risk, bonds are broken, stocks are bubbles, real estate is illiquid, silver is liquid, undervalued, and real. In war economies, silver's purchasing power rises. That premium isn't priced in yet, but it will be. Expect volatility. Banks may attempt one final smash at the open to trigger stop losses. That dip will be a bear trap. If price drops, it's not a sell, it's the last buy. Manipulation cannot overpower fundamentals for more than hours. Retail interest is exploding. Google searches for how to buy silver are surging. The herd is coming, but it's always late. By the time they reach coin shops, silver will already be $120. You are early. Use that advantage. Unit bias is working. Bitcoin at $100,000 feels expensive. Silver under $100 feels cheap. That psychology channels capital into silver. It is the people's crypto. Tangible, scarce, and affordable. As crypto profits rotate into hard assets, silver will be the primary beneficiary. This is the wealth transfer we've been describing. Paper holders lose. Metal holders preserve purchasing power. Next week's move toward $150 will create a new class of winners. Yes, markets are volatile. Yes, banks may change rules, halt trading, or raise margins. But they cannot print silver. The destination is fixed. The path of least resistance is up. Strategy is simple. If you hold physical silver, do nothing. Do not sell at $100 or $120. Let the move fully extend. If you're buying, the window is closing. Monday may be the last chance below triple digits. Avoid pre-orders. Get metal in hand. Mainstream coverage has begun. Forbes and Bloomberg are discussing deficits. This is soft disclosure. They are preparing the public. When headlines turn bullish, the mania phase begins. This isn't the Hunt brothers. This is global. Millions of individuals, sovereign nations, and industrial giants buying together. Banks defeated two men. They cannot defeat the world. Once $95 clears with volume, resistance disappears. We enter price discovery. Blue sky breakout. In short, charts, fundamentals, and geopolitics align. $150 is the target. The dollar is the casualty. Next week marks a turning point. This is not financial advice. It is an interpretation of data. But the storm is here, and so is the opportunity. Be on the right side of it.